What is revolving debt?
Yes, this is a very, very important point. So we talked about credit cards being, your best friend and your worst enemy. They're your best friend when you pay them off on time, and you pay the full amount every month. That gives you complete peace of mind and zero fees, right? You don't pay any extra fees to the bank.
The full amount, you mean whatever you've spent?
Whatever you've spent, exactly, the total outstanding. The bank cunningly will offer you two options every month. Watch for this. They'll either offer you to pay the full outstanding, that's everything you spent in the last 30, 60 days, or they'll say, just pay the minimum. And they make it really tempting, actually. These days, when you go into the app, they'll be like, just click here, just pay the minimum. So that's another trick, which is to turn you into what's called a revolver. This is a customer who revolves their credit every month, and guess what? They charge interest on that. So let's say at the end of this month, you had spent 10,000. You didn't pay it all off. You just pay the minimum, maybe $500.
500, it's so little, huh?
It can be.
Wow.
Yeah, it's up to the bank and you. But
and I'm like, wow, I'm paying 500.
Easy.
And I think it's happened to me before, and it's like, you're not even thinking. You're just like on the app, and it's
That's
saying,
easy.
you get a big flash saying,
Yeah.
pay 500.
Yeah.
And you're like, okay, I mean, something will happen,
Yeah.
but the bank is okay with it. So
Yeah.
I'm not really
Haven't
gonna
done anything
I don't
wrong.
I don't have to think about it, basically.
No.
Yeah.
What you've just done is create a long-term loan now in your name, which will be charged at least 30% interest. Sometimes as high as 42, 48% interest. It's really frightening.
Wow.
And what might happen next month is you'll realize that interest has been added, the number's gotten bigger, plus all your new spending through the month, and suddenly the number's looking really enormous. And so you'll say, let me just do the minimum again, right? That's a normal behavior.
It's
And
suddenly
this-
that 10,000 minus 500
Correct.
is 9,500. You said, okay.
Plus
whatever.
interest.
Then now it's 3% a year, blah, blah, and you spend 3% a month, 30% a year.
Yeah. And you spent some more. So suddenly it could be 20,000.
20,000. You're like,
And
whoa.
then it's really frightening. So then you just revolve again. And this is what's called a revolver. Somebody who just keeps pushing out for another day the problem of their balance. Bank loves it. He's making 3% a month on that, at least.
And
It's
that's the
brilliant.
business of the
That's
bank.
business. That's how they make money. That's literally how they make money. So don't be that person. A third of people are in that situation every month. And actually that number's growing in India today. And it's really important not to become that person. And talk with your friends about this. Make it, a taboo. It's not a good situation to be in. It puts you in that burdensome feeling where the number just keeps growing, and you're paying for nothing.
Never pay the minimum.
Never pay the minimum if you can.
I mean, it's such a catch-22 situation, right? Because you're broke, so you take a loan.
Yep.
But because you're broke, no bank will touch you. So you go to a lending app or a BNPL company
Yeah.
with crazy rates, and you take it because you're broke.
Yeah.
And you started with 50K,
Yeah.
for month-end stuff, but you can't pay it back. Then you take another 30K, and then another and another, and before you know it, it's like 2 lakhs.
Yep.
So how do you get out of that?
Don't get into it.
That's the
Don't get into it in the first place. Let me give you the other way around.
Right.
Okay. This is how it should be done. And then compare and contrast. So it's a funny story, but the very first customer we had at Zest was almost too good to be true. Okay. It was a young guy living in Patna in actually a very small town. He was working freelance, doing bits and bobs, didn't really have a great salary. Exactly what you described. No bank would have given him a credit card. He wanted to buy a mobile phone, a second-hand mobile phone. So there wasn't even any, consumer durable loan. So we lent him $30,000 to buy the mobile phone. Then a few months later, he came back and bought a laptop, okay? And I think he bought a few other objects over the next couple of years. And then he progressed to a personal loan, actually. He took maybe 2 or 3 lakh. By this point, his credit score was excellent, superb. I think he was probably at 850. So we were happy to keep lending to him. But then we noticed his salary had gone up significantly. We carried on the relationship. And then a couple of years later, we realized he'd disappeared. We hadn't seen him for a while. I actually got in touch with this customer and discovered in that time that he'd been building his credit score, he'd also been building his credit journey. So he used the personal loan to actually do a course, a master's in Python. I think it was some sort of like computer science master's, but he particularly became this like Python specialist. He used that to get a job in Bangalore in a services company. He shifted to Bangalore. By this point, his credit score was like excellent. He then, believe it or not, got a home loan at the age of 28, bought his own property, so had no rent, obviously had a home loan, but it was well within his limits. And I went to visit him, and he had this amazing apartment, like really well set up. He was doing extremely well. I just checked his LinkedIn, and he's gone from strength to strength. He's like a vice president in a tech company today. And the reason I tell this story is he used credit super cleverly. He used it to get this very, very good score, which empowered him to take lower and lower cost loans later in his life. So the home loan maybe came at 10%, right? Which actually ended up saving him money from rent. Most of us get trapped into paying a fortune on rent. I love that example because it was one 30K loan on day one that got him to that point, let's say 5-6 years later. But importantly, he never messed up. Right? He didn't shop around. He stuck with one loan provider. That's a good trick. He gradually grew the outstanding, but kept his utilization well below the limit. And then actually, intelligently, he went out into the market and looked for the cheapest cost of credit later in life and used that to his advantage. So a strong credit score unlocks for you financial freedom that many of us never dreamt of when we were in our early 20s. Imagine having your own house at 28, and that's all because of the work you did from day one on improving your credit score. Be that person.
A lot of hard work, but nothing is easy, basically.